Hello, this is Japanese Economic Review Channel. Today we review Japan's May 2026 petroleum statistics. The data reveals a shrinking supply chain, a dramatic shift away from Middle Eastern crude, and distinct supply-demand imbalances across fuel types. Let's explore these structural changes. At a glance, Japan's petroleum supply chain is contracting. Crude imports, fuel imports, domestic sales, and inventories all saw year-over-year declines. However, midstream fuel production saw a slight recovery to 102%, creating a unique market anomaly amidst the broader market contraction. Total crude imports fell sharply to 7.29 million kiloliters, a 61.6% drop compared to last year. This third consecutive month of decline nearly halves the inflow, directly reflecting the cooling domestic demand and cascading throughout our entire national supply chain. We are seeing a historic shift in procurement. Middle East dependence dropped to 73.9%, an 8-month decline. Imports from the UAE and Saudi Arabia fell significantly, while U.S. crude surged by 174.8%. New imports from Oman and Russia highlight a rapid diversification strategy. Despite the 40% drop in crude imports, domestic fuel production rose to 10.26 million kiloliters, exceeding last year's levels. Refiners are likely drawing down existing crude reserves. Production increased for gasoline and jet fuel, but systematically fell for naphtha. Japan's international fuel trade continues to narrow. Fuel imports stand at 1.99 million kiloliters, continuing a persistent 12-month slump. Exports also retreated for the second consecutive month to 1.38 million kiloliters, underscoring the systemic contraction in cross-border flows. Internal market demand reflects the broader economic cooling. Total domestic sales fell to 9.76 million kiloliters, a 94.8% year-over-year result, marking a 4-month downward trend. While jet fuel and kerosene saw growth, primary fuels like gasoline, diesel, and naphtha experienced declines. Total fuel inventory dropped to 9.33 million kiloliters, down 5% year-over-year. This third consecutive month of declining reserves indicates an ongoing adjustment phase, as the market absorbs the impacts of lower production in certain fuels and draws down stocks to meet market demands. A product-level breakdown reveals key imbalances. Jet fuel and kerosene show strong market pull, draining inventories. Conversely, naphtha faces a systemic slump across both production and demand, leading to stagnant stock. Balancing these gaps is crucial for future stability. All data presented is sourced from METI's preliminary release. Detailed tabular data is accessible via METI's official channels. Our next update, covering June 2026 data, will be published on July 31, 2026. Thank you for your attention to these vital energy market trends. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.